things that we always focus on, which is value. It is about convenience, and then, of course, it's about differentiation. And if I maybe spend a bit of time first on value, we remain the cheapest retailer in terms of an overlapping items in your basket against all other major retailers. 3 for 2 mechanic, very well understood. We've delivered 387 million rand in cashback through to our loyal club card customers. Then if I talk about convenience, 902 stores, 718 pharmacies, 530 Department of Health patient pickup points, and 204 clinics. And then, of course, if I spoke about differentiation, it's all the story about private label. Private label now constitutes 26.1% of total retail sales. In that, 1 in every 3 items sold in the front shop is a Clicks private label branded product. And of course, it gives us tremendous opportunity to further grow our margin.
Let's look at the distribution side of the business. We note here that turnover growth didn't come in line with what you were seeing it. What kind of issues did you have on that particular side when it comes to that systems implementation?
We still had a bit of a challenge in terms of the systems implementation, but really has only impacted the first quarter. What I tried to show today in our results presentation with a marked improvement between quarter 1 and quarter 2 in an area such as, for example, exports, small though in wholesale, but it's grown by well over 30% in the second quarter. Hospitals for the full period down 8.1%, but in the second quarter up 0.4%. Clicks actually at 4.7% for the full year, but up 13% in the second quarter. All of that on the basis of an improved stable system within our distribution business, and then, of course, improved customer service levels, which led to improved purchasing compliance.
When you look at the baby category, how competitive is that space right now?
Incredibly competitive. I think you see every retailer really having gone into that. That's because the baby, customer is a very attractive customer to have, both in terms of frequency and, of course, as well, the size of basket. We, though, believe that we've got a winning strategy because it's not just one element. We're not just competing on price or competing on location. It's a very integrated strategy. What I'm most pleased about is the performance of our standalone baby stores, up 13.5%. And then, of course, our new baby in-store execution, up well over 35%. So real opportunities for us to expand our baby market shares in the period that lies ahead.
Speaking of pricing, how do you think about that pricing when it comes to the personal care segment in an environment where I can imagine some of the grocers are also just as competitive?
Well, yes, but one of the challenges that we had originally as a company was that, we were not permitted to have pharmacy. And so other than in drugstore models across the world, we've always had to compete with the national grocer retailers. And so from the very beginning, we needed to ensure that we stood for value, which is our original payoff line, which is you pay less at Clicks, which we've transitioned into feel good, pay less. And so we've always had that particular positioning, and it stood us in very good stead.
Back, I think last year you acquired the 24-hour pharmacy chain, MChem. What were some of the learnings that you've gleaned from that transaction when you look back on it?
Not so much learnings, but very interesting insights in terms of, what do we do in order to roll this format out? We have now completed the work with help of external consultants, and over the next period, probably 3 to 5 years, we believe that we can roll that out to 10 to 15 locations nationally. Some key learnings, as always, important and has just been so well received by Mr. Malik and his team. Fit is important, organizational culture is important, and an ethically run business is very important. A key insight was that about 30% of a specialized pharmacies such as MChem has got a very similar product range to what we find in the rest of our Clicks stores. And so the opportunities to say, how do you utilize market power in order for you to get so much better in terms of what you deliver in the front shop of such a specialized pharmacy. And then the other learning would be about the importance of really building valuable and credible relationships with the healthcare specialists, because they are the ones that are referring their patients very, very specifically to a specialized pharmacy such as the MChem type format.
When you think about opportunities for expansion, I can imagine there's still a lot of opportunity that you see in South Africa. But if you had to think of further expansion within certain parts of sub-Saharan Africa, what would be on your radar, or which area would be on your radar?
Well, we've gone very gingerly. We've got 22 stores in Namibia. We've got, this year we'll have 20 stores in Botswana. We're going to be opening up our third store in Lesotho, and we've got 5 stores in Eswatini. So quite, we've been in the SADC countries, and now we are venturing a bit further north. Currently, we are in quite advanced stages in terms of our foray into Zambia. And interestingly enough, the Clicks brand travels so incredibly well across the African continent. We are now being approached by players in the Zambia, Uganda, Ghana, Kenya space to say, really at the government level, please come into our country. And then also in terms of other players, would you maybe like to acquire a stake in our company? So I think the brand travels well. The brand is quite well known, and there are opportunities beyond what we already have in the SADC countries.